What's up, everybody? Thank you for joining me today on Crypto Lit. My name's Nathan. Today I got my morning cup of coffee and I want to sit down and go over some things in trading and things that I look at when I'm doing trades. So it's always important to continue learning and expanding your understanding in technical analysis. So today I wanted to analyze a trade I did yesterday, jump on and highlight some of the reasons why I went into this trade and show you some of the details of it and some things to look for as you are starting out on trading. So let's get straight into it. So this is the Bitcoin chart on the hourly time frame. So what we're seeing is it dropped way down last week, traded sideways for several days, and then on Sunday dropped down quite extensively again and took a big drop down. And so what I was watching for as it was going down was this drop to the downside and this rounding off. And so what I'm going to show you all today is one of the #1 performing patterns in technical analysis. It's called the bump and run reversal bottom. If you're new to trading, I recommend going over to this site. It's called thepatternSite.com, and it's built by Thomas Bulkowski. And Bulkowski has a lot of great technical analysis information in this site. Now, his technical analysis is more historically stock-based, but these patterns play out just fine for crypto as well. Now, one thing I will say is the information on this site is top-notch. The design is not. You look at it and it looks like one of those sites that you go to where it says, you know, in construction, or you can buy this site or something like that. The web design on the site's not the best, but if you can get in and dig into the different patterns that are on here and get into the information's excellent. So if we go into Thomas Bulkowski's top 10 reversal patterns and scroll down, we'll see here on the reversals that the bump and run reversal bottom is the second best performing pattern that we'll see in technical analysis. So if we come in and check that one out particularly and scroll down, I'm going to go over the highlights of this. Some of his stuff can be a little bit difficult to understand, but basically what you're looking for is a narrow trading channel, downward sloping trading channel leading into a big drop that is double the height of the trading channel at least. So big drop, a rounding off, having it come back up to the top of that channel, break through, come down and test it again, and then break back up to the upside. And so we're going to look at Bitcoin yesterday, and actually this is on the hourly, but I'm going to zoom in a little bit more on the hourly and we'll lay this out here. So we had this narrow downward sloping trading channel. And if we take a look at the height of this, when Bitcoin dropped out yesterday, or late Sunday rather, it dropped out very low to the bottom, and that's easily twice the height of this narrow trading channel. So if we drew another line coming here, you take the height of it, and you can see that that's like about 3 times the height of that trading channel. And then it started rounding off to the upside yesterday. So this is when I started watching it, and I continued this this trading channel upper trend line through the entire pattern. What we would look for is Bitcoin to break above this trend line, come down and test the trend line, and then come back up. And once it hit the top of the breakout again, so it breaks out, comes back, tests it, when it hits back up to this range right here on the top of this initial breakout, that's where I tend to put my trade in. And the target for this would be the bottom of that rounded off bottom or bump. You take that and you bring it to the area where it tested, and that's going to be your target. So the target was, you know, somewhere upwards of 19,900. Yeah, if we took it down a little bit to where it really reversed, then maybe 19,850. So when it came back down and tested this trend line after breaking it the first time and then went back to the upside, I went on ahead and put in a trade that with the condition of the price coming back up to 19,300. When it reached back up to that, I knew it was going to be moving to the upside. So I said a conditional trade for when it hit 19,300 to trigger a limit purchase order at about 19,320. So then I know that most of the time these patterns don't play all the way out to the top of the pattern, right? So I tend to take a percentage of it, about 60 to 70%, and that's where I'll put in my target to exit my trade. So my exit was supposed to be at about 19,600, right about here. And this was a perfect textbook bump and run pattern. Now, one thing I'll mention is because we're on a lower time frame here, the way I do my trades is the lower the time frame, the lower my time for actually hitting the top of this target. So I knew that I felt like this trade, the time frame of it would be by the end of yesterday before the new daily candles started. So this was a very short time frame trade. Basically, it played out perfectly. One thing I will say is I put in my condition at 19,300 to, when it hit that price, put in a limit buy order at 19,320. Now, unfortunately, that was not enough distance after my trigger price. The problem is that trigger can take a little bit of time to execute your trade. And so Bitcoin, if it's running very quickly, can jump right over your execution price. So that's basically what happened to me. I put in a trigger at 19,300 and my buy was supposed to be at 19,320. By the time the exchange registered the purchase order, I believe Bitcoin had already passed it and it canceled my order out. So my order didn't hit and I had to come back in manually and do it later because this happened while I was away from my keyboard. So what could have been a 20 to 25% return for me ended up being only a 7 or 8% return. But that's a fantastic return off of one trade in a day. So that's one of the things I wanted to come in and show y'all. Bump and run reversal pattern. We look for this thin downward trading channel. Watch for the bottom to drop out at least twice the height of this trading channel. Watch it to reverse. You extend over that trend line. When it breaks the trend line, comes down and retests and comes back up, that's where you want to put your trade in, right about here after it's coming back up. Now, if we analyze this a little bit closer, you'll see that as it was coming up, it bounced around between the 50 and 100 period moving averages, and the resistance at the 100 was too much for it to overcome, and now it's come back down. So that's one of the other things that when I mentioned that on the hourly chart, my time frame for these trades to play out is a lot smaller than if it was on the 4-hour chart or the daily chart where these patterns were playing out. Basically, the bigger the time frame in my way of trading and the way I do things, the bigger the time frame, the longer time I give for these patterns to play out before I look to exit the trade. So this one being the hourly, really it was only going to be, my time frame was only going to be a few hours for this pattern to play out before I look to exit. The other thing to think about, I've shown you what the target was, being around 19,850, but you could see there's the 100 period moving average coming into play there as well, and a lot of times that's going to have resistance or show resistance on patterns. These moving averages, it's astonishing how often they will be support or how often they'll be resistance. And so looking to set your target price for exiting the trade, I looked at this and said, hey, it's probably going to bounce off that 100. So that again was why my target was going to be only about 19,650. So that's all I've got for y'all today. Just want to analyze some of my trading techniques and give you guys some pointers on how I look at setting up trades. If you're new to technical analysis, I really encourage you to go check out the Bolkowski site, the pattern site. website.com, and get in and look at some of those trading patterns and start learning technical analysis. They're not going to be 100% of the time, of course, but technical analysis does work. These patterns do tend to play out. If you're new to crypto and looking to do trading, go ahead and check out the description below. I've got a bunch of links for different exchanges that I use to trade on. Using my referral links, you'll get bonuses when you deposit crypto into your account, and you can use those bonuses then for free money in your trades. Of course, if you're just starting out with trading, you want to be very careful and very conservative in your trades. So that's all I've got for y'all today. Please like and subscribe this video, and I'll see you guys in the next one.